Brainy Bots for investors. Artificial intelligence, AI, is a universal tool for investors. The technology can be used in myriad ways, from screening assets and forecasting prices to planning investments and managing risks. The first wave of applications for AI in finance emerged during the 1980s. The early efforts dealt with neural networks for market forecasting and stock selection. Unfortunately, the hardware platforms and software techniques of the era were too flimsy to have much impact. On the upside though, neural models enjoyed a flurry of breakthroughs at the dawn of the millennium. Advances in hardware and software gave rise to brainy programs that often surpassed human experts in their own domains. A watershed lay in the generative pre-trained transformer, GPT, a neural template meant to process natural language. One outgrowth was ChatGPT, a conversational agent released in 2022. A smart chatbot can consume information in varied states of structure or disorder, ranging from a chain of numbers to a swatch of prose. By rounding up information in discrepant formats, the digital agent can merge disjointed facts, distill useful insights, and prepare cogent reports. From a larger stance, virtual aids can hike the efficiency of human principles by performing most of the mundane work. Moreover, smartbots may hoist the effectiveness of decision-making by gleaning obscure signals, spotting hidden dangers, and crafting novel strategies for investment. In this video, we will explore the top 11 ways that cyber agents can empower all manner of investors. The survey caters to beginners and experts in investing, as well as observers who want to grasp the wealth of applications for adept software. 1. Market survey. A smart chatbot can help the investor by keeping tabs on the real and financial markets, as well as hunting for fresh opportunities. At a basic level, the smartbot saves time and effort for the human principal. The agent may also prepare plans and provide cues to bolster profits while shrinking risks. Some examples are as follows. A virtual aid can pinpoint crucial events and emerging trends in the stock market, along with general guidelines and pointed suggestions for investment. The chatbot may conduct an in-depth review of a particular stock or an entire sector, including the drawcards and drawbacks entailed. The smartbot could build a dashboard to present mounds of murky data in graphic form, in tandem with interactive features for the user to ask questions, revise models, and explore scenarios. 2. Trend analysis. A cyber aid can crunch historical data to fathom long-run trends, as well as short-term waves. The subjects in hand run the gamut from single firms to entire countries in the real economy, or from solo stocks to broad benchmarks in the financial forum. The smartbot could review the performance of mid-size stocks. After culling the winners and losers, the agent may infer the reasons for the divergent outcomes, then project the trend lines going forward. The bot can gauge the correlation between oil prices and energy stocks in order to predict how the markets will respond to the toppling of dirty fuels by clean forms based on the wind and sun. The chatbot may examine the effects of macroeconomic factors, such as the inflation rate, interest level, and economic output on the course of the bourse down range. 3. Asset appraisal. A smart chatbot can evaluate a stock by fetching information from diverse sources, merging the inputs, and weighing the results. The goal is to estimate the fair value of the firm along with a recommendation to buy or sell the equity. The smartbot can size up a maverick firm, such as Tesla, by way of internal factors, including technical innovation, production capacity, and logistic efficiency. The setup is similar for external facets, such as customer loyalty, regulatory climate, and societal impact. The agent could compare a group of stalwarts such as Alphabet, Amazon and Microsoft, in terms of financial health and business clout. Examples in this vein range from current assets and cash flows to technical skills and customer raves. The same is true for vetting a private company such as OpenAI. The smartbot could scour published papers, live demos, and social media to assess the firm's strengths, as well as predict the revenues and expenses in order to guesstimate the overall worth of the enterprise. 4. Sentiment review. An adroit bot can sense the mood of the market by sampling the chatter in cyberspace using sentiment analysis, a set of techniques to plumb the emotions conveyed through text and speech. A sentiment reading works as a contrarian indicator in the financial realm. That is, the market does the opposite of what the majority expects. When most investors are bullish, the smart players turn bearish. when the majority is bearish, it's time to be bullish. The agent can survey the comments of pundits and influencers on platforms like Twitter and Reddit to gauge the degree of optimism or pessimism, then match the latest readings against the historical averages. The bot could canvass the reviews and ratings of stocks or funds on platforms like StockTwits and Seeking Alpha, then check how the rankings have jibed in the past with subsequent moves of the same assets. A rare exception to the rule of contrary thinking applies to corporate insiders such as chief executives. The bigwigs are intimately familiar with the internal status of their firms along with the external conditions in the economy. When the leaders buy lots of shares in their own company, it's a good sign for the stock. When they sell much more than usual, it's a bad omen. 5. Scenario scanning. A methodic way to divine the future is to explore a raft of potential outcomes. In this light, the motive forces include prolonged trends such as technical progress and economic growth, as well as passing shocks such as banking crises and market crashes. Economy. A chatbot can gather historical data from far-flung countries, then discern how the inflation rate affects the housing market along with construction firms. Bourse. The smartbot could analyze the impact of a global financial crisis on the stock market by using archived records, such as news reports and financial stats. Technology. The agent may review scientific papers, commercial patents, and market forecasts to presage how quantum computing will transform the cybersecurity market, including the prospects for vanguard ventures in the field. 6. Market forecasting. A smartbot can peer into the future and scope out a melange of timelines. The survey should reveal the most likely paths for the real and financial markets. The topics in sight include economic growth and business climate along with their effects on market benchmarks and singular stocks. The virtual aid can simulate a global pandemic or a geopolitical crisis to see how the shocker may affect a lone stock, or a whole industry, a broad sector, or the entire bourse. The smartbot could generate a medley of profit levels for a given firm and predict how the stock will react to good news as well as bad spots. The vignettes should reveal common patterns, such as salient opportunities and yawning sinkholes. The agent can create hypothetical scenarios of mergers and acquisitions among motley companies, then predict the resulting synergy in the real economy along with the odds-on benefit for the firms in the stock market. 7. Opportunity alert. A smartbot can monitor the markets and alert the investor to lurking dangers, as well as brewing opportunities. The faithful vigil allows the investor to save time and toil, as well as avoid information overload, sidestep booby traps, and earn higher returns. A high-growth firm may flop more than its peers when the stock market at large breaks down. The pratfall could be a golden opportunity for the deft investor to snap up the crumpled stock at a bargain price and reap a plum profit when the bourse at length bounces back. A gaggle of aging carmakers reports a big drop in sales and earnings over the past year. Most investors and gurus brush off the grim news and instead bet on a swift recovery. Sadly, the madding crowd fails to see the macro-level forces ranging from technical progress and green transportation to consumer choice and public policy that condemn the fogies to extinction. A groundbreaking venture unveils a product roadmap that points to vast profits half a decade down the line. Yet, most investors and analysts ignore the lush prospects due to their usual fixation on time spans ranging from a few months to a single year. 8. Risk management. In talking about the perils of investing, both rookies and experts obsess over the volatility of assets, namely, the transient swings in price. However, a graver threat, by far, lies in the permanent wipeout of capital. When a company goes bankrupt, all its securities go splat, from shares and options to bonds and warrants. Another trusty precept for the sage player lies in the ample diversification of assets. In that case, no single bombshell is apt to destroy the entire portfolio. A smartbot can spotlight trends and reveal patterns in disparate markets, from tech and healthcare to leisure and travel, in order to foreshow the looming hazards and pending impacts. A virtual aid can analyze online resources ranging from articles to videos. For instance, it could examine a chart of stock prices and offer plausible reasons for the turnout, along with future prospects, including the risks and gains in store. The smartbot may concoct a wholesome cocktail of stocks based on the goals, interests, and risk tolerance of the investor, then tweak the portfolio over time to reflect changes in personal tastes as well as shifts in external conditions. 9. Performance audit. A smart bot can assess the performance of a private portfolio, then compare the result against the benchmarks of the bourse. Among the latter, the yardstick of choice among professionals lies in the S&P 500 index of giant stocks. The digital aid could assess the merits and shortfalls of the current strategy by pitting the personal portfolio against the touchstones by way of average return, mean volatility, and maximum drawdown. The smart bot may converse in natural language to learn the investor's hopes, interests, and risk limits. Then it could offer tailored tips along with the reasoning behind each suggestion, including the kickers for the safety of capital and the return on investment. The agent can compare the movements of different asset classes in tandem with their tie-ups. Examples involve the relationships among stocks, bonds and options as well as futures, currencies and realties. 10. Safeguard. A smart bot can survey the market to espy hidden dangers. The docket is similar for warning the investor against hasty decisions and impulsive moves. As a backdrop, both newbies and oldsters suffer from mental blocks and manic whims to their own detriment. The mass of investors, including experts, tot up the returns on investment in a witless fashion and jump to the wrong conclusions. For instance, a hothead might add up a couple of annual returns in a simplistic way and declare that a given fund rose by 10% over 2 years, when in fact the correct method shows that the vessel fell by 20% from start to finish. According to a rampant myth, the ratio of price to earnings, P/E, is the go-to yardstick for vetting a stock, even though the metric is a faulty guide that dwells on the past. Instead, the proper tool lies in the peg gauge, which looks to the future. By received wisdom and popular folklore, hedge funds rack up stupendous profits for their clients. In reality, even the top tier of hedge funds as a group loses money as time goes by. To wit, the hotshots underperform a stash of cash stuffed under a mattress. 11. Evergreen Learning. The driving forces in the marketplace span the rainbow, from technical breakouts and logistic brainwaves to geopolitical flaps and lifestyle changes. The jumble of drivers shapes the structure and function of the economy as a whole, as well as the environment and nurture of singular actors. A smart bot can profile trends and waves in the tangible economy in order to unveil the causes and effects of the movements, along with fresh opportunities for investment. The agent may track the breakouts in technology by scanning myriad resources ranging from articles and interviews to photos and videos. The object is to weave the factoids into a coherent story of past milestones and current outcrops, as well as future prospects. The bot can buttress a program of lifelong learning by offering worldly advice drawn from wide-ranging sources on the net. The setup is similar for custom feedback based on the talents and foibles of the investor. Conclusion. Artificial intelligence is a versatile tool for all investors, ranging from part-time tyros to full-time pros. The basic functions of smartbots span the spectrum from market analysis, trend spotting, and asset valuation to sentiment survey, scenario scanning, and risk management. We focused mainly on the applications of AI for investing in the stock market. Even so, the same concepts and methods apply to other asset classes such as bonds and options, currencies, and realties. To sum up, digital agents serve as friendly guides and tireless aids for shrewd investors who want to expand their knowledge and refine their skills in a complex and dynamic environment. In the age of smart software, the apt question is not whether we need AI at all, but rather how best to use AI to earn higher gains at lower risk.